All right, so I think the first question we have to talk about is, the Trump trade. How are you seeing it right now as we see it lose just a bit of steam? Bitcoin, obviously the exception. Bitcoin continues to move higher, but some of these other trades cooling off a bit.
Yeah, I think that's right. So sentiment got really aggressive. Animal spirits kind of returned to markets in those couple days post-election, but a little bit of kind of a collection or consolidation period is to be expected. The market was on good footing entering the election. It remains on good footing now, but I do think that the market's stepping back, taking a breather, evaluating a lot of moving pieces, including all those potential cabinet picks that you mentioned, makes a lot of sense to us. So we're still bullish. There's seasonal tailwind at the year end, but I think a consolidation here makes a lot of sense. All
right, so a bit of a consolidation makes sense to you. I do want to talk to you about just some of the cyclicals and some of the sectors, at least, that were part of that so-called Trump trade. That was financials, industrials. I personally thought materials would be part of it with the idea that we're going to make more things in America. We're going to show the chart of each of these sectors since Election Day. Financials, industrials, big pop. Materials actually trading lower. In your mind, when we look at these so-called Trump trade sectors, do you see the rally continuing? And one of them in particular, is there one that you like better? Do you see a turnaround in materials? I mean, what are you seeing when you look at it?
Yeah, I think the two that you mentioned at the top are the two that I think have legs throughout the administration, right? So financials, a clear deregulation story, a lot of potential ways that deregulation can benefit that. You get the lower interest rates, potentially spurring some capital markets activity, and then stock market at all-time highs, good for the wealth management portion of the business. Industrials, plenty of secular tailwinds there. The bipartisan infrastructure bill, all the aerospace and defense spending, potentially, as you mentioned, a reshoring story as well, building things in America. Energy and materials, I think, to get excited about them, it's difficult because you're too tied to the commodities underlying, I think. And I'm not sure that we're entering that commodity super cycle that can really spur those stocks higher.
All right, I want to come full circle a bit. We were just talking about President Biden and the Chinese President Xi Jinping meeting. Xi Jinping talking about the incoming administration, using the quote, this is through an interpreter, just to be clear, but saying that the incoming administration should make, wise choices. I don't know if that's the friendliest way to kind of describe how you want things to go between you and somebody that's coming into a new position. I want to get your take on investing in China and the idea that Xi Jinping says that President-elect Trump needs to make, quote unquote, wise choices.
Yeah, well, I think the choices are already made to an extent, and that is not the friendliest policy towards China. The tariffs there, the first time around, were pretty extreme. I think there will be larger, broader, and targeted directly at China this time around. So I don't know that it's necessarily going to be a friendly administration. I'm not necessarily sure that the Biden administration was all that friendly towards China. So it is a bit bipartisan to be a bit more defensive between the U.S. and China relationship. As far as investing there, I mean, the stock market there has been extremely volatile and not a big total return over the last 20, 30 years, quite frankly. So the U.S. companies that are tied there, linked to the consumer, it's a lot more about what China does to stimulate that part of their economy as to how those stocks will perform. But I think this relationship will be icy, and I don't think it's got a lot of room to improve.